This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
Thanks for joining us here on the Retirement Solution with financial advisor Jon Hicks. RetirementSolutionShow.com is our website and where to start the conversation with the questions that you have about your savings plan. We also have links posted in the show notes. I realize that you would much rather settle down on a warm beach with a stack of finance books. So bringing up reality TV to you, Jon Hicks, is a little bit lost. But you live in a house full of women. Certainly there's some reality TV on in the background.
Without question.
On occasion.
I mean, flip or flop, flip that house. No, most of them are either real estate oriented.
Okay.
Every once in a while there's a cooking show. I hate the baking ones. I don't know why.
The baking
I'm a
ones?
terrible baker.
Okay.
You got to measure everything.
Yeah.
It just seems so
very
like
precise.
it's real work.
Yeah.
Yeah, but no, there's any number, especially real estate. There's a lot of real estate.
So none of the housewives drama shows, none of that's on?
I'm sure my kids watch some of that, the little blurbs or snippets on YouTube or TikTok or whatever it is. But none of those really come on the house.
I have a theory that, because I have smart friends that are good, hardworking people, and they will talk about how they love these shows. And I have this, I'm like, you just like watching that drama unfold and think to yourself, my life's pretty good. I think that there's that mentalness thing that's happening there.
I think that with as many, I mean, when you think about the young ladies in my life and then the female dogs, three female
so many women in
ladies
your life.
in my house. I have six
by
girls in the house. And so there is plenty enough drama. Plenty enough drama. I don't think
you don't need the reality
too
TV.
much televised drama. And I think they even feel the same way.
Right? They're like, please don't. We're all set. We're all stocked up on crazy here. There is a long-running reality TV show on Bravo. I think it's been running for almost 10 years now. This show called Southern Charm, if you like reality TV.
I've seen the commercial. I've never seen it, but yeah.
It follows the social world of several old money families in Charleston, South Carolina. And I'm always fascinated by the old money life, so I might need to look at the show. But a recent episode dealt with a historic 1850s home owned by one of the matriarchs, Patricia Altschul. It's very regal sounding, isn't it?
Yes, it is.
She wants to leave this historic home to her son, Whitney. I mean, it's just, there's so many layers here. Her son named Whitney.
Hand me a wheat thin. Whitney. A wheat thin.
Here's the thing, is that what stood in her way, of course, it was taxes. So they turned to the experts. Here's how some of the story unfolds.
Several years ago, we had a meeting with our lawyers and estate planners and money manager. And they said, when I kick the bucket, Whitney is going to have to pay, 46% in death duty, something extraordinary. And the house is now worth, $15 million or something. So we decided that Whitney should buy the house from me and put it in his own trust.
This is multi-layered. And this is old money, so you've got a $15 million house. Forget the assets. But we talk a lot about small business owners that sell their business and the nightmare that they walk into. And so that's what I wanted to talk to you about, the idea, because the other thing we talk about is estate and legacy planning, how the big emphasis that you have at J. Hagan Capital in creating proper estate plans for the folks that you work with. So thinking about what opportunities somebody has to take care of right now so that family doesn't face financial burdens down the road, or even just for themselves.
Sure.
Relieving burden. As far as taxes go, let's talk planning.
Yeah, so a lot of these situations, they happen a lot more often than you think, especially when it comes to real estate or farmland or just regular land in general. A lot of us don't go through life thinking, what is that land worth? And over the last 10 years, especially since COVID, we have seen some really crazy price appreciations. It does not surprise me one bit that an 1850s home in Charleston is worth over $15 million.
If it's in that prime Charleston real estate, but
it's probably not even that close to the beach at those prices. I mean, I know that just recently confirmed Scott Bessent, who's now the new Secretary of the Treasury, he lives in South Carolina. He built, or he engineered that pink, they call it the Pink Palace in Charleston. I've seen it many times. I had no idea who lived there. Well, our Treasury Secretary lives there with his family. But the craziest thing is when you think about those values of those homes, the way the current estate tax works, and we'll see what happens with the estate tax, but the way the estate tax works, if you pass away and you're the owner of this property, and your estate is worth X amount of dollars, then the next generation has to pay 40% as an estate tax. And a lot of people say, well, John, I'm never going to be anywhere near an estate tax. Well, next year it technically changes, and we'll see if the administration changes the structure up. But it potentially goes back down to just $5 million per person. Now, in my office these days, in any given week, there are people that come in with $4, $5, $6, $7, $10 million all the time. They'll say, hey, dude, I saved my butt off. I worked hard, or I just sold this plumbing company, or I'm getting ready to do that, or I just sold this property, or, all that farmland that we thought we were going to do. They're putting, cell phone towers on those things now. And I have all of these assets. And it's like, wow, that's great. How's it titled? So that's one of the biggest issues. And that's what they were talking about. Okay. So in that clip, we heard the lady saying, hey, what we should do is sell this to my kiddo and have them put it in a trust. You can absolutely do that. It's not the only way to do it. There are multitudes of ways.
Okay.
When you're talking about looking at the tax structure, the one thing you don't want to do is to make investment decisions only because of taxation. You never want to do that. You want to be certain first that you understand the value of those assets. How truly important are they to you? Because depending on what kind of trust they use, are they going to use a credit shelter trust, an asset protection trust? Are they going to use a second generational trust, a wealth transfer trust? What are they going to use? And there are hundreds and myriad ways to structure trust. They are very, very complicated. They can be exceedingly difficult to understand. And it depends on what state you're in, right?
Yeah.
So I do happen to own some property in South Carolina, and I can tell you right now, South Carolina law sucks in some situations dealing with real estate. And I had to learn that the hard way. I had to learn out, how do I have to title it? How do I need to do these things? How to use an appraisal company? All these things I didn't know. Well, I learned through a series of hard knocks. Since then, we have different estate planning attorneys and tax gurus on our team that help us through that.
Okay.
But guys, the biggest thing you have to understand, a lot of people say, well, John, I'm not going to have hundreds of millions of dollars. Guys, you don't need that. The question is, do we want to avoid taxation on a highly appreciated asset? So maybe it's real estate. Maybe it's a highly appreciated stock. Maybe you got very lucky and owned NVIDIA, 8 years ago, 9 years ago, and you're looking at that going, oh my gosh, I've got millions of dollars of NVIDIA. I still like it, but I don't need that much of it. But the reason you don't sell it,
my portfolio is 50% NVIDIA.
Literally, I saw a gentleman the other day. Yeah, a gentleman that I was talking to the other day had millions and millions of dollars. 80%, Heather, 80% of his liquid holdings was in NVIDIA.
Wow.
Now, here's the thing. Do I like that company? Yes. Do I think it's going to be good? Yes. But is it potentially financial malpractice? If I don't tell him, listen, that's a really large concentrated position. You probably need to consider diversification and or at a minimum, put some safety nets on it.
Okay.
Put some hedges. Get some options if it goes wrong in your situation. Because the whole reason he does not want to sell it is because of taxes. Taxes. And let's do the tax on this, ladies and gentlemen. This is important because most people don't understand how much it is. They're like, well, capital gains rate's only 20%. The capital gains rate is. Now, hold on. So now let's look at that. So you have 20% potential capital gains on an appreciated asset. Okay. Now, depending on your income, because of the wonderful tax laws of the Obama administration, there's a net investment income tax as well at a certain amount, which is NIIT, which for many people at a certain income level is 3.8%. So now we're closer to 24% taxation. But then, are you a resident of a state that has a tax? Yeah. In Kentucky, 4, 5, 6%, Indiana. But then in some states like New Jersey, New York City, you may be paying SALT taxes, state and local taxes of 9, 10, 11, 12, 13, 14%. Yep. So for the average bear in the state of Kentucky, you're looking at close to a 30% tax rate total when you're just looking at capital gains. Okay. So on $1 million of gain, guys, you may be giving up $300,000 to the government. Is that a lot of money? Heck yeah, it is. So there are ways that you can use trusts to avoid the taxes on any major asset sale, but you have to do it. You have to orchestrate the trust before you sell the property or the stock or the highly appreciated asset. Okay. You don't have to just give it to charity. I know that a lot of my contemporaries, they talk all the time, well, just give it to the church and da-da-da-da. That's great. And anyone that's charitably inclined, charitable remainder trust or charitable trust are genius. I think they're great. But if you want to hold on to those assets, but just avoid or at least kick the tax can down the road further, you can use certain types of installment trusts that allow you to do exactly what we want. Pay no taxes now, diversify in nearly any asset you would ever want to consider, utilize those assets, and only pay tax when you pull it out, right? So that allows someone in that situation where if you're going to sell a property, or you're going to sell a strip mall, or you're going to sell a stock, it allows you to completely eliminate current taxation all the way across. Now, why would someone do that? Well, what if the Trump administration gets their way and there is a huge tax savings down the road? Wouldn't it be awesome to know that, wow, you took care of something today before the market went against you, but you're going to get future favorable tax treatment in the future, right? That could be one of those really genius things. And the secondary part of that is it gives you time. If you were going to make $3 or $4 or $5 million in profit on selling a property or a stock, you would typically have to pay all the taxes in the year that you do that, or the year right after you do that, right?
Okay.
By spreading it out, you could potentially do that over a 4, 5, 15, 20-year period. Yes, you're going to be selling it. Yes, you're going to be paying taxes, but you get the choice of which tax bracket do you want to step up in. You may completely eliminate your need to actually pay capital gains taxes depending on the rest of your structure. So if you have not considered that, just because you're not a multi-billionaire or have a $20 million property does not mean you can't save an absolute fortune in taxes, but you have to have the right plan. You have to put it in place. If you don't have someone that you work through that with, call our team. Give them an idea of what you're looking at, what you're thinking about, and find out what your opportunities are to make a great decision, not just because of taxes, but for your financial future.
RetirementSolutionShow.com is where to start the conversation with Jon and his team at J. Hagan Capital. We also have links posted in the show notes helping you understand if you have planned to sell a business or land or an NVIDIA stock that went crazy, or talk to the early Apple investors. There are a lot of those people out there too that just, it's almost like they are tethered, they are handcuffed to this accidental, huge stock investment, and they don't know what to do next. If you have questions, we are here to help you get some answers at J. Hagan Capital. So again, RetirementSolutionShow.com.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with Jon and the team at J. Hagan Capital by visiting RetirementSolutionRadio.com. Be sure to listen to Jon's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Incorporated is not licensed in all 50 states. To find out if J. Hagan Capital Incorporated is licensed in your state, please call 502-690-5635. J. Hagan Capital Incorporated is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital, LLC, NPN number 188279094.